Good morning, money magnets and master traders. It's your Uncle Charles here, and in yesterday's video, Uncle mentioned how those chop days will lead to those big trendy days, and we can see with today's price action it aged very well. I'm super grateful, and I hope all my money magnetic viewers made lots and lots of money. Now, how did we trade it today? I wrote in my Discord that 670 to the 673 range is the chop zone, with 671.5 as the middle level. So to end it bullishly, 671.5 must hold as support and 673 must clear to put those higher targets in play. The bear case scenario was, I wrote, if 671.5 and 670 fail as support, chop ends bearishly with those lower targets in play. Be ready to react. I wrote that before market open. We look on the 15-minute chart and we can see right here, we broke down that 671.5 level, and in this area, not only we broke down the 670 level, but we treated like a resistance and found selling pressure. Worth noting that when a previous buy zone yesterday around that 670 level, there was a lot of buying strength and it was the buy zone. And when that buy zone turns into the next or the new sell zone, that is your sign to be very bearish. And of course, I let the group know when we broke down those support levels. I wrote, not trusting anything until we break the chop range, 670 to 673. As of now, 671.5 is resistant. That's when we broke down 671.5, and I'm letting the group know it is resistant, and if it clears, then 673 would be back in play. If 671.5 rejects, I need to see 670 fail for me to get in puts or turn bearish, and boy oh boy, we lost 670. We retested it, found rejection. We kept breaking down those lower levels. There was definitely reasons to be bearish, and it came after a very chop day. This is price action 101. Chop days lead to trend days lead to chop days. Now we got to get to the daily chart. It's looking like a potential evening star pattern, which is usually a bearish reversal pattern. But either way, the gap got filled and we found some buying pressure from our Fibonacci levels. The question now is, will there be more selling pressure in the coming days, or will bulls buy the dip once again? Two things we need to watch out for. We have to look at the 670 and the 673 level, this important doji here. The low of that candle was what ignited the strong selling pressure that we had intraday. So 670 and 673 must hold as resistance. As long as we are below it, I am bearish. But if we manage to recapture those levels, then it's a good chance that bulls are putting in a higher low to go take out all-time highs. So what is the plan for tomorrow? If you are a bull, you want to see 670, 671.5, and 673 recapture. If those levels recapture on the 15 to 30 minute charts, the way Uncle Charles shows you on his charts, you want to look to long because you're likely going to hit all-time highs for sure this time. But if the breakdown levels hold, meaning if SPY stays below 670, we need to watch those next support levels. 668.7, which was the mother candle's high. We closed below that. So technically, based on that setup, SPY is in false breakout mode. So below 668.70, still overall bearish. Next support's at 667 and the fib level at 665.8. If those levels fail, we can favor more downside. But where did the strong buying pressure came from? Well, we have a fib level at 663.3 and today's low was at 663.3. So if we break down those levels that I mentioned, 668.7 holding as resistant, and then 667, 665.8, and 663.3, we can favor a lot more downside. So don't go long unless 670, 671, and 673 recaptures at least on the 15-minute chart, because as long as below, SPY has a chance at more downside. And to avoid a higher low, the main level I need to see break down is 663.3. If that level's failed, it's safe to say we are heading down lower. Triple Q, I spoke about the 610 and 608.3 level this morning, and I mentioned it yesterday's video. We broke those levels down and it's looking bearish. You also filled the gap. Now the next support levels that I have are at 604 and 602.8. If those levels fail, we can assume more downsides in play with 601, 599.7, or much lower in play. If we are to get a bounce, lost levels must recapture. As usual, we need the false breakdown setup. Not every false breakdown leads to a bottom, but every bottom started with a false breakdown. That means 606.2 must recapture. That's a fib level. I have a level at 608.3, 610. Those levels must recapture, and the breakout of 611.75 and 613 would invalidate the potential double top. Be ready to react tomorrow. I have a feeling the fun is not over yet. Volatility. Now, Tesla had a beautiful move to the downside. We did get a little bounce at the end of the day, but we must look at the context. Did it clear a level or did it break down a level? In this case, it broke down a critical fib level, which was at 441. So as long as below 441, the breakdown stays intact. And if the breakdown stays intact, we are bearish on Tesla. Bearish follow through would be to break down 436 and 434, which are the next fib level. And if it breaks down, we can head back down to 432.5, 431, 429, 427, and the next critical fib level at 425.4. Trust no bounce unless 441 can recapture. Here is NVDA. Well, we bounced all the way down to the next fib level around the 176.6-ish level. Had a buy zone around 177 as well. But the bottom line is it did not break down that 180 level. It tried, but it failed. Once again, the plan is still the same. I need to see 180 fail, and also that 177 to 176.6 area. I need to see that fail as well for me to lean bearish. Otherwise, I'm still neutral between the 180 to the 185 range. And if this is a double bottom, I need to see 185 clear. And if it does, based on this context, I would be super bullish in favor we get back to 192 and 194 plus. Here is IWM. Beautiful breakdown after a choppy day yesterday. We lost the 245 level. So as long as below 245, Uncle Charted is bearish on IWM. Bearish follow through would be to keep it below 243.5 and break down 242 and 240. If that happens, we are dropping down a lot lower, maybe another $3 to $5 below. Trust no bounce unless 245 can recapture. That will be a good start for the bulls for a false breakdown setup. And bullish follow through would be to clear 247 and put 250 or much higher in play. Here is Apple with the beautiful breakdown. We broke down the previous pivot high around the 259 level. So below 259, Apple is technically 259.2 actually. Apple is technically in false breakout mode. And as long as it's in false breakout mode, meaning staying below 259.2, 258, 256, and 253 or lower will be targets. I will trust no bounce unless 259.2 can recapture, 261, and of course where the selling pressure began, right around that 262.8-ish fib level. Recapture those levels and Uncle would be bullish once again. Here is the VIX. Well, it did bounce from critical support levels, but it also rejected from critical resistant levels. Anything can happen with the VIX, but I tell you, in my opinion, what I want is for it to go up, because if it goes up, there's volatility, everything is very tradable. But if we break down 17, volatility is going to be taken out. We don't want to see volatility gone, but if it does, we'll do what we have to do. 17, if that fails, breakdown mode for VIX. Otherwise, it needs to recapture the 200 daily moving average and get back above the 5. That means I need to see 19 clear and 20.24 clear. Those levels recapture, I'll be bullish once again, but I also need to see that 22 level clear as well to put 23.7 and 25 plus back in play. Now, before I let you go, I have to give you guys the DarkPool levels. Now, Uncle mentioned I have a level at 671.5, but DarkPool level 1.3 billion in premium. That's a good sign of movement incoming for tomorrow and the rest of the week. Big premium, over $1 billion at 671.31, very close to one of my own levels. And at the lower levels, this is like 517 million. Another one's around 200 million, 667.77. This one's at 667.73. So they're about the same. Add these levels to your charts. I would put 667.7 and of course 661.3 and label them DarkPool levels. If those levels break down below those levels would be bearish, and of course if those levels can recapture, it would be bullish. And that's all I have for you guys today. If you guys want to trade with Uncle, give you guys that extra advantage, that extra edge for making it in this market, definitely look at the pinned comment below and enter Uncle's Discord. Other than that, I love y'all. Peace.